The final strategy we're going to talk about today is tax loss harvesting. What is tax loss harvesting? It's selling investments that have lost value to offset gains from other investments, potentially reducing your taxable income. What do I mean? Well, this is your taxable bucket only. Remember, we had 3 buckets: taxable, tax deferred, and tax free. This is your taxable bucket. If you have money in your taxable bucket, you've been buying stocks in there throughout the years, you've been filling that bucket with 10, 15, 20, 50 different stocks that hopefully you've made some good money on over the years. It's inevitable with stocks and the stock market. Every once in a while, you're going to have a bad year. Some of those stocks are going to lose value. Some of those stocks are going to lose money for you. Most people would say, hey, that's fine. They're good stocks. I'll hang on to them. I will let them come back. They will come back over time. And I'm sure over the long haul, I'll make money on those. That's a good buy and hold strategy. Takes a lot of discipline. I applaud that. I like a buy and hold strategy. But in a taxable account, you don't get any tax benefit for buy and hold. If you're looking for tax benefit, you want a tax loss harvest. You sell those stocks while they're in the red, while they're losing money. You realize that loss and you use that loss to offset gains and potentially ordinary income off your tax return. You can rebalance your portfolio in a very tax efficient way using tax loss harvesting. I have a client who has about 50 stocks in a taxable account. He's done very well on about a third of them, really well. 6 or 7 of them he's lost money on, and the rest are, I would say, underperforming at best. So what we're going to do is I came up with a strategy to use all the loss from the money that he lost on the bad stocks. We're going to use that loss. We're going to sell the underperforming stocks because they haven't really been there. He's made money, but not a lot. There is some capital gain. We're going to offset that capital gain with the capital loss on the losers. And we're going to take his portfolio of 50 mix of good, bad, and mediocre stocks, and we're going to whittle it down to 25 excellent stocks that he wants to keep for the long haul. And we're doing it all tax-free by harvesting the loss. That's pretty amazing. This is something that you should be doing all along if you have a taxable account. Do it every year if you can. One thing to keep in mind, if you sell an asset at a loss today, you cannot buy it back for at least 30 days. That's called the wash sale rule. If you sell, let's say, for example, Tesla stock today because you're losing money on it, but you like Tesla and you want to buy it back and have it in your portfolio, you have to wait for at least 30 days. You can buy back another EV company. You can buy back Rivian or any other EV company. You just can't buy back Tesla for 30 days. But if you have the Fidelity S&P 500 fund that you're losing money on, and you want to harvest that loss, the IRS says you can buy the Vanguard S&P 500 fund right away because they are not substantially identical. I'm not sure how they're not. They look identical to me, but I'm not going to argue with the IRS on that one. So use tax loss harvesting on your taxable accounts as often as possible.